Welcome to today's meeting. I hope you're all well. Now, I want to start off the meeting and talk about the NZX, the New Zealand exchange. The NZX shows the change, the value, the price, the volume, and the capitalism across many different markets, showing hundreds of businesses. I'm sure you all have heard about it, or know about it, or invest. Um, this website gives investors opportunity to invest easily and see the growth of these businesses and their stories. I feel like this will be very beneficial for us, and I've been comparing our primary and secondary companies. Our primary is the Port of Tauranga, and the secondary is the Napier Port Holdings. By comparing these two, the growth and the success that they have made over the year has been inspiring. Not even just this year, every year has been so inspiring that we're going to continue to observe these companies and we're going to learn from them.
One of the ways to further fund the growth of in Puerto Rico is through the use of an initial public offering. An IPO is the first time that our stock as a company is offered to the public to purchase. This is usually done as companies such as our own in Puerto Rico are seeking for additional capital to increase our growth. Looking at examples like the Port of Tauranga Limited stock price from 2 years ago until today, we can see that it has greatly increased, though there was a dip in early 2020 due to COVID. It is now stabilized and is continuously increasing. If we compare it to Napier Port Holdings Limited, again, we can see by having an IPO, it has allowed them to gradually increase their share price over time. One of the biggest advantages of establishing an IPO would be the financial benefit we would gain, as raising capital can be done quickly by reaching a large number of investors. This allows us to continuously fund the business's growth by allowing us to invest towards property, equipment, plants, and more. Another advantage would be it allows us to attract better management and staff through liquid equity. This would further enhance the company's growth and could allow better skilled people under the company. Furthermore, another advantage would be that it allows the entrepreneur to continuously fund a growing business without giving up control. This means that there wouldn't be a need to sell the entire business, but only a portion that is needed to raise extra funds.
Hey, I'm Michael Oentardi, and I'm one of the accountants. So I'll be talking about capital markets and equity markets, and also analyzing how Port of Tauranga Limited are doing in the last 5 years. So firstly, I would love to talk about the performance of Port of Tauranga Limited in New Zealand stock exchange in the last 5 years. So Port of Tauranga Limited shares has ups and downs, but after analysis of the details, they have constantly had steady growth and is on an upward trend. On 19th of July 2020, saw an all-time high in the past 5 years of $8.09 New Zealand dollars for one share. There was a drop in their shares price on 20th of March 2020 at $5.95 New Zealand dollars. This is definitely caused by the COVID-19 pandemic, which resulted in lockdowns for a long period of time. After this, Port of Tauranga Limited saw an upward trend again, but saw a drop again on 16th of July 2021, which saw Port of Tauranga Limited stock price to go to $6.70 New Zealand dollars per share. As of today, Port of Tauranga Limited is sitting on a $7.10 New Zealand dollars per share. Comparing to one of our competitors, which is Napier Port Holdings Limited, Port of Tauranga Limited is doing significantly better as they are more consistent and is showing an upward trend, whereas Napier Port Holdings is not doing that bad themselves, but is on a downward trend compared to Port of Tauranga Limited. This analysis conveys that Port of Tauranga Limited is on a positive upward trend despite some drops in their stock price per share on some occasions, mainly due to COVID-19. The upward trend that we are seeing for Port of Tauranga Limited is because we are doing it differently compared to our competitors, which resulted in the interest by the public, which is reflected by the constant increase in the company's stock price. In general, we are doing well in the New Zealand Stock Exchange and will definitely reach higher heights in the upcoming future. So next, I'll be talking about the capital markets. Capital markets are where savings and investments are channeled between suppliers, banks or investors, people or institutions with capital to lend or invest, and those in need. This may include places such as the stock market, the bond market, currency and foreign exchange markets. So next, I'll be talking about the primary and secondary markets within capital markets. Primary markets is when, for the first time, company sells public stocks, like in an IPO, initial public offering. An issue of the primary market is definitely the strict regulations. It also affects smaller businesses because they usually are unable to buy securities in the primary market. The secondary market is, on the other hand, overseen by the regulatory body like the SEC, where previous issued securities are traded between investors. Some examples are the New York Stock Exchange and NASDAQ. There are two options to the secondary market, which are the auction and the dealer markets. Next, I'll be talking about the equity markets. Equity markets is a market where company shares can be issued and traded. This enables companies to gain capital and also enables investors to have a piece of ownership of the company. The process is done using the method of bidding for stocks by offering a certain price, and a specific price is asked by the sellers. Stock exchanges can be done at physical places or virtually. From research and analysis, I've come to a conclusion, and I definitely recommend our company, Port of Tauranga Limited, to keep finding as many investments as possible, both through the capital markets and equity markets. I definitely think that the investments through stock will give us the best raise of our capital, but other methods such as using venture capitalists can benefit Port of Tauranga Limited as well.
A way to get further funding for our business is through venture capitalists. They will supply us with funds and present a business plan, and essentially they take our small idea and build it through capital and help us grow. There are 3 stages. First is seed stage financing, which is where they provide the funds to finish the development of our idea. The second stage is early stage financing. This is where they provide the financing to get the businesses up and running. And then the third is latter stage financing, which is a hybrid of debt and equity financing, which gives the lender the right to convert to an equity interest in the company. And this generally occurs after the venture capital companies and other lenders are paid. Another way to get further funding is through angel investors. They are individuals who provide capital for a startup business, and usually in exchange for convertible debt or ownership. Angel investors will give support to us at the initial moments and when most investors are not prepared to back us. The difference between angel investors and venture capitalists is the fact that a venture capitalist is a person or firm that invest in small companies, generally using money pulled from investment companies, large corporations, or pension funds, whereas an angel investor is an accredited investor who uses their own money to invest in small businesses. Venture capitalists tend to invest in businesses that are already established to reduce their risk of losing investments, whereas angel investors are more likely to invest in businesses that are just starting out. Because of this, angel investors take more risks than venture capitalists. Both want business equity and or some control in how our business runs. Because they invested money into it, they want to make sure that they get a high return on investment out of it. Venture capitalists might expect a return on investment anywhere between 25% and 35%. Angel investors may want a return between 20% and 25%. Depending on how far along we are in our business, if we are still starting out, an angel investor might be more beneficial, but since we are looking to expand, we should try pitch for a venture capitalist. In order to convince venture capitalists to agree in investing, we need to be able to pitch our idea. They usually invest in a management team and its ability to execute on the business plan. They are looking for executives who have successfully built businesses that have generated high returns for their investors. They would prefer to invest in a bad idea led by accomplished management rather than a great idea supported by a team of inexperienced managers. We can also add our own personal investment as a way to show we believe in our business. Self-financing our business gives us much more control than other finance options. It also means that we don't need to pay back or rely on outside investors or lenders who could decide to withdraw support at any time. We need to make sure we're ready and willing for investors to fund our business. Securing investment capital is one of the best ways to help us grow our business, and it takes forward planning and careful consideration. It involves proving our worth to potential investors and having the data to back it up.
Hi everyone, I'm Madison, a venture capitalist looking to invest in this growing company. So basically what I do as a venture capitalist is I'm a private investor, so I provide capital to help companies grow in exchange for an equity stake. So I basically target companies that are looking and needing help to expand and grow, and I help them by again providing capital. So I'd be interested in your company as there are 2 CEOs along with 2 accountants. So having 2 CEOs in a company is usually a good thing, such as shared ideas of the company, good debates can occur, as ideas can almost like bounce off each other. Both CEOs can work together to achieve certain goals, create plans for when things go wrong, so like problem solving, along with the double ideas, the double strengths, double startup money, double the money that they can keep like reinvesting into the business. So also working power, as in one person could, let's say, be in a meeting, the other could be on site or in a completely different meeting. So the only con would be if you haven't previously worked together, so the work ethic may be a problem, can cause confusion in the workplace, but by like not fully understanding each other, but it's nothing a conversation can't fix. So there's also 2 accountants where it's a similar idea, where it's 2 brains working together, always better than one, can help each other out, can complete harder tasks, improve accuracy, increased workflow. So yeah, basically I'd be investing in your company as the management seems strong and this company has a lot of potential growth that just needs that little extra push.